Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. And today we're diving into NextEra Energy and Florida Power and Light's latest report. And let me tell you, it's not just a dry recitation of numbers, it's a peek into how these giants are shaping our energy future. Stick around because we're going to decode what these numbers really mean for you. And before we get into the nitty gritty, if you love getting straight up insights from these often jargon filled documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down these reports even further. Alright, so we're looking at a Form 8K, which is like a current report for big public companies. It's filed when something significant happens that shareholders need to know about right away. The key date here is July 23rd, 2025. This means whatever we're about to talk about, it happened on or around that date. This filing involves two main players, NextEra Energy Inc., which is the big parent company, and Florida Power and Light Company, a major subsidiary that provides electricity to a huge chunk of Florida. Specifically, it's about the results of operations and financial condition. Basically, how did they do financially? On that July date, NextEra Energy released their second quarter financial results. This 8K is essentially attaching that news release as Exhibit 99, giving us a look at their performance. They're sharing their earnings for the second quarter. So what did this news release tell us? Since this 8K is just referencing that release, we have to infer that the important disclosures are in that attached document. Typically, these releases highlight key financial metrics, maybe discuss significant business events, and provide some forward-looking statements. For NextEra Energy, a company deeply involved in power generation and distribution, this would likely include things like revenue, profit, earnings per share, and maybe even updates on their massive investments in renewable energy. We also see a listing of securities registered on stock exchanges. This confirms that NextEra Energy's common stock trades on the New York Stock Exchange under the ticker symbol NE. And it points out their corporate units. These are essentially preferred stocks or debt instruments that have different dividend or interest rates. We see a 6.926% corporate unit trading as NEPAR. There's also a 7.299% corporate unit NEPRS and a 7.234% corporate unit under the symbol NEPRT. These instruments represent ways the company raises capital, and their yields give us a hint about the cost of that capital. Now let's look at the folks signing off on this report. NextEra Energy Inc. is signing off. William J. Goff, the Vice President, Controller and Chief Accounting Officer, has signed on behalf of NextEra Energy. This is the person responsible for the company's financial reporting accuracy. And then we have Florida Power and Light Company. Keith Ferguson, the Vice President of Accounting, Financial Planning and Controller, signs for them. Again, these are the financial gatekeepers. Okay, so this 8K is pretty straightforward. It's a notification that a press release with second quarter financial results has been issued. The real meat of the information, the actual numbers that tell the story of NextEra's performance, would be in that attached Exhibit 99. Since that exhibit isn't directly here for us to analyze in detail in this specific document copy, we're going to operate on the typical information you'd find in such a release for a company like NextEra Energy. Think about NextEra Energy. They are one of the largest electric power holding companies in the US. They're not just about traditional power plants anymore. They are massive investors in solar, wind, and battery storage. So their financial reports are a window into not just how many kilowatts they sold, but how their transition to renewables is performing financially. Let's imagine what we typically see in that Exhibit 99 news release. We'd be looking for revenue figures. For a company of this scale, we're talking billions of dollars. We'd want to know if that revenue is growing. Is it keeping pace with inflation? Is it beating analyst expectations? Then we'd look at profitability, net income, earnings per share. Are they making money, and are they making more money than they were last year? Or perhaps more importantly, more money than investors expected them to make in this quarter? We'd also be keenly interested in their operating expenses. How much does it cost to generate and deliver electricity? Are their investments in cleaner energy sources proving to be more cost effective in the long run, or are they still carrying a high price tag? For instance, if they announced a big jump in capital expenditures for new solar farms, we'd want to see if that's reflected in their debt levels or their cash flow from operations. Consider the context. They operate in Florida, a growing state, so electricity demand is likely to be robust. However, they also face regulatory hurdles and the ever-present challenge of managing an aging infrastructure while investing in new technologies. Their large scale in renewables also means they are sensitive to factors like weather patterns that affect wind and solar output, and government incentives for clean energy. If we were to see their reported numbers, we might look for something like total revenue for the quarter. If it was, say, $6 billion, that's a significant number, then we'd compare it to last year's second quarter. If it was up 5%, reaching $6.3 billion, that's positive growth, but we'd have to ask, is that 5% enough? Does it outpace the growth of their expenses? Another key area would be their earnings per share, or EPS. Let's say they reported EPS of $1. If last year's was $1.10, that's a 9% increase. That sounds good on the surface, but what if their revenue only grew 3%? That would suggest their profit margins are widening, perhaps due to cost controls or better efficiency in their renewable assets. Or it could be due to a change in accounting, which we always keep an eye on. A crucial element for utility companies like NextEra is their debt load. They often carry substantial debt to fund massive infrastructure projects. So we want to see their debt to equity ratio or their interest coverage ratio. If their debt is high but their earnings are growing strongly and their interest coverage is solid, that's less concerning. But if earnings are stagnant and debt is rising, that's a red flag. Let's imagine a scenario where the report shows they've increased their renewable energy capacity significantly. That's in line with their strategy. But what if their operating income from those renewable segments is lower than projected, perhaps due to lower than expected energy prices or higher maintenance costs for newer technologies? That would be a mixed signal, good on strategy, but maybe not so good on execution or current market conditions. Remember those corporate units we saw listed? Those are essentially preferred stocks. Companies issue these to raise capital. The yields like 6.926% or 7.299% tell us the cost of that capital. If they're issuing more of these at higher rates, it means borrowing is becoming more expensive for them, which can squeeze their profit margins on future projects. So while this particular 8K is a notification, it points us to a financial update that is critical for understanding how NextEra Energy and Florida Power and Light are performing. It's about their ability to generate power, manage costs, invest in the future, and ultimately deliver value to shareholders and customers. Now, looking at these results more broadly, NextEra Energy is constantly in the spotlight because of its massive scale and its aggressive push into renewables. Their strategy is arguably one of the most ambitious in the utility sector. They're betting big on a clean energy future, which positions them well for long-term trends, but also exposes them to risks related to technology changes, policy shifts, and the capital intensity of these projects. A notable risk for a company like this is regulatory. Public utilities are heavily regulated, and changes in pricing or environmental rules can significantly impact their bottom line. Another risk is execution on their vast renewable projects. Delays or cost overruns can be very damaging. On the other hand, their size and diversification across generation types and geographies offer resilience. In conclusion, while we don't have the specific numbers from Exhibit 99 here, this 8K signals that NextEra Energy has updated the market on its second quarter performance based on their known strategy. We typically expecting renewable portfolio and how they are managing their significant capital investments and debt. A solid performance would show growth in earnings that outpaces expense increases and a healthy management of their debt. A weaker performance might indicate challenges in ramping up renewable efficiency or unexpected cost increases. Alright, that's our breakdown of what this NextEra Energy 8K signifies. What's your take on their business strategy and how they're navigating the energy transition? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps us keep making these deep dives, and subscribe for more corporate deciphering. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.